Hello everyone, I'm Gregory Schnazy and let's talk about Bitcoin Borrow Die. On this channel, we explore the Bitcoin Borrow Die strategy, discuss Bitcoin financial services, and other key investing concepts. As always, these videos are for educational purposes only. They are not financial or tax advice. Just to give a quick overview of the Bitcoin Borrow Die strategy, we want to buy Bitcoin, a rapidly appreciating asset, borrow fiat against it, which does not trigger taxable events. And then when we pass on, our inheritors inherit our assets at a stepped up cost basis, which is very tax efficient. If this is a new concept to you, check out the previous videos where I go into this strategy in detail. The topic for today is dollar cost averaging and some new services from River. So dollar cost averaging, or DCA, is an investment strategy where you invest a fixed amount of money at a regular interval, say $100 every week or every day or every month, regardless of price. It's like skipping coffee daily instead of chugging it all at once. Some key components of DCA is a fixed amount, so dollars, not shares. We're not concerned about price. A regular schedule, a regular interval, and then this strategy can be applied, basically to anything. So like stocks, ETFs, but we're going to focus on Bitcoin. And this image here kind of shows what it looks like when we apply dollar cost average to Bitcoin. So of course the price of Bitcoin can fluctuate greatly given the day, given the time period. But when we purchase the same amount at the same interval, so $100 every day or every week, each of these dots here would be a time period. So regardless of price, we're just going to buy. We're going to buy $100 every Monday. So if Monday's down here, we're getting more, we're getting a little bit less, we get less over here. But we're always buying the tops, we're always buying the bottoms, so it averages out over time. And it's a very easy strategy to execute, which is the key point. We need something that we can understand and that we can execute over long periods of time. You can do this manually. There's a bunch of services that will help you out to do it automatically, but we're just buying regardless of price. It's kind of like when your 401k purchases shares or ETFs, you get paid, you buy the thing regardless of price, and then you kind of average out like this orange line here. So this is a relatively simple concept for investing and just acquiring assets. But one thing that's really supercharging this is this new feature from River where they have Supercharged Recurring Buys, which I kind of want to walk you through, introduce you to it, and then go into some modeling here. So basically, if we take a step back, with dollar cost average, when we purchase and the price is high, we're getting less sats, less coins per purchase. And then when it's lower, we're getting more. But what if we could automate this or have a service that would juice it or turbocharge when it's lower? Here we would want to up our purchase, which is exactly what River does. So looking at these supercharged buys, supercharged recurring buys are a type of recurring buy where you can automatically buy more Bitcoin at the time of your recurring orders during price dips, which is a great time to buy. So this is how they break it out. So based on DCA, so you could, again, do this hourly, daily, weekly, and so on and so forth. River will take either like the 7-day moving average if you're looking at it hourly or daily, or 14 or 30-day moving average based on longer time periods. And then you can also choose how to supercharge it. So how much more you want to juice your buys when Bitcoin is below those periods. So you can do 25%, 50%, 100%, or 200%. So for example, a $10 recurring buy with a 100% supercharge multiplier will buy $10 regularly And then at the time of your recurring buy, if there's a price dip, you would buy $20 instead, which is really advantageous because the price is lower. So not only would you get that benefit from DCA, you'd always get a little bit more. You're getting double, more than double, because you're putting in twice as much, but the price is lower. So you're really stacking sats here. So here's a model I kind of want to walk you through just at a high level. So the top numbers here, line or rows 1 through 10, this is just a really simple DCA model, comparing it to lump sum. So this could be week, year, pick your period, and I'm just using $100 per coin. Bitcoin is not $100 per coin anymore, but it makes the math easier. But let's say we're going to invest $100 every week. Every Monday, we're going to buy regardless of price. We're going to do it for 5 weeks. Let's see how it goes. So if on week 1, we start at $100, that's the price of Bitcoin, we're going to spend or invest $100. We're going to buy 1 coin. Very, very straightforward. But if the price of Bitcoin goes down to $80, we're still only going to put in $100 from 100 to 200 here, but we would buy 1.25, which is great because the price is a little bit lower. If the price goes up to 120, we buy 0.83 Bitcoin. But again, we're only putting in $100 every week, regardless of price. So at the end of our 5-week period, this could be quarters, this could be years, we end up with 5.1 Bitcoin. So when we look at, we could have put in a lump sum order here, $500, and just got our 5 coin. But since we spread out our purchases and the price went up and down, we actually end up with 5.1 coin, which is a 2% uplift. And again, it's a strategy that can be executed very easily. It's easy to understand, and it's something we can do over long periods of time. We need a strategy that we believe in, that we understand, and we can actually execute. So this is DCA just on a normal time period, comparing it against a lump sum purchase. Now what River has done is really, really cool. We'll look at the River model here. So again, we have our 5-week period. It's going to be $100 per coin. We buy 1 coin. We invest $100. We have 1 coin. So that's great. But now in week 2, look up here. We would still put in our $100 in this first model, but we would end up with 1.25 Bitcoin. Here with River, we're going to turbocharge it. Instead of just putting in $100, we're going to put in $200 because the price has dropped. So we're going to get 2.5 coin. And then when the price is up again, we would go from 300 to 400. So we're only putting in $100. We get 0.83, and then so on and so forth. So if the price drops a little bit here, we're going to put in 200 instead of 100. And then when the price goes back up, we're going to put in 100, from 600 to 700 here. So a few things to call out is we're putting in more than the 5, obviously, right? So we're going to get more than that in return. But we want to see what the difference would be from the percent invested and to the percent where we get more coin. So comparing to a our $500 5 coin lump sum on week 1 again, we're putting in $7.45 or $745. So this is about 40% more invested than our 5 here. So we would want to see more than that in return. But even though we're putting in 40% more, we're getting 49% as an uplift, because we're putting in more. The more dollars that we're putting in is when the price of Bitcoin is lower. So that's really just turbocharging us as we go. This is a really, really cool feature. I've turned it on. I suggest you visit river.com and explore this. This is a great idea. Again, it's marrying a simple concept, a simple strategy like daily cost averaging. But when the price of Bitcoin drops below like a 30-day or 30-hour moving average, depending on your time frequency, you're buying more. So you're deploying more capital when the price is lower, which is great to see. So that's kind of an overview of daily cost averaging, this new River product, and what supercharging it can look like. So let's take a step back and look at my Bitcoin loan so far. Again, Bitcoin strategy is still not really cooperating with me. We see the total value somewhere around $511. We need to get it up to $672 just to break even, to cover the interest and the fees. So, hopefully October helps us out as we go, but sitting fine here, moving forward, still within the first month of the loan. I just want to give an update on that. And then for those of you that have Bitcoin loans, I created this service called Margin Watch. I get an email every morning that shows me the current value or the current loan to value of my Bitcoin loan and what my LTV is. And again, this concept we discussed in prior videos, so go back and check that out if this is new to you. But basically, the lower the percentage, the safer the loan is, the more over collateralized it is. So at 31.8% here, we're looking really good at a Bitcoin price of about $115,000, $116,000 give or take. And then Margin Watch will also show you what a bear market and a big bear market could look like. So if the price of Bitcoin dropped to $91,000, my loan would have a 40% LTV. So now this is going up from 31% to 40%. So as we start to get higher and higher, we'll start to face margin calls around 70%, which means you need to post more collateral or pay off some of the loan to bring it down, because around 80% we start to be liquidated, which is not what we want to see. And that's why I created this service, so you can be way out in front. So none of these LTVs are even close, which is great. We want them to be low. And then if Bitcoin really dropped around $80,000, it'd still be at 46%, which is still safe, is looking good. But we would, once we start crossing that 50%, 55% threshold, these would start to flash red, and I would start to add more collateral just to bring that down. So I just wanted to, again, introduce everyone to this concept of daily cost averaging. This is pretty straightforward and is well known, but River has really taken it to the next step with these supercharged recurring buys. So I would definitely recommend checking that out. They're a great service. Let me know if there's any questions in the comments, and I'll see you next week with a new one.